until the tariffs are either done away with or mitigated to a smaller percentage. In other words, we are not the only ones that use tariffs to control trade balances with other countries. As long as tariffs are fully levied on these countries, and specifically, there's no resolution between trade talks, which are non-existent from what I understand, what I've read, between China and the United States, we can expect the uncertainty meter to continue to move higher, and more uncertainty genuinely moves gold to higher ground.
This week, the gold market experienced a notable degree of volatility driven by a combination of macroeconomic indicators, investor sentiment, and shifting geopolitical dynamics. After a period of sustained strength earlier in the year, gold prices declined sharply during the week, registering their steepest weekly loss since February. The dip was largely attributed to a strengthening US dollar and an easing of global trade tensions, which collectively undermined gold's appeal as a safe haven asset. At one point during the week, gold fell to a two-week low of around $3,202 per ounce, as market participants digested a less uncertain outlook for global trade, particularly with signs of improvement in US-China negotiations. The reduced geopolitical risk appetite led some investors to reallocate assets away from gold, contributing to the pressure on prices. In parallel, a firmer dollar, buoyed by expectations around the Federal Reserve's interest rate path, further weighed on the commodity. However, towards the end of the week, gold managed to stage a modest recovery. On Friday, it rebounded by approximately 0.5% to trade at $3,256.51 per ounce. This late-week uptick was supported by cautious positioning ahead of the U.S. non-farm payrolls data, which was anticipated to show a slowdown in job creation, with economists forecasting a gain of 130,000 jobs in April, down from March's 228,000. Traders appeared to be hedging against the possibility that weaker labor market data could signal a more dovish turn from the Federal Reserve, though recent events suggest a lot of uncertainty ahead for the global economy and markets. Gary Wagner, a veteran technical analyst, says these developments will be great for gold prices. In a recent interview, Wagner discusses gold's latest rally, noting that while dollar weakness has played a role, it doesn't fully explain the magnitude of the move. He suggests that the ongoing consolidation could be setting the stage for gold's next upward breakout. As we present clips from the discussion, please like and share this video, subscribe to the channel, and turn on the notifications bell for instant alerts. We appreciate the support and hope you enjoy the video.
We'll start with the dollar very quickly and then go into gold. Of course, there's a 100% correlation, negative correlation between the dollar and gold. A strong dollar takes gold down, and the reciprocal, a weak dollar, supports and takes gold up. We're looking at a chart. It is set in terms of the time element. Each candle here represents 1 week. And you can see that back at the beginning of this year, my pointer is on January 13th and January 6th, the dollar index was at 109. And over the course of just a couple of months, we've seen it go from 109 and touch an intraday low of 97.67, currently back to about 99.09. And that was a major support level, technically speaking, and that's because of these two bottoms. The first one, second day of January 24. The second bottom occurred on Monday, the 9th September 24. So these two bottoms acted as a level that we felt should be technical support. We did barrel through that. However, we came right back up, and right now I went from major support being broken to major support being challenged, because we are right in this area, and it's a little too early to tell if the dollar itself will consolidate in this area and maybe pop back up because it's had such a dynamic fall from grace, or continue lower. If the dollar continues lower, 96.90 is going to be the next level of technical support, and it is based on this set of lows that came in in 2023, the 10th of July. This level at the end of December, Monday the 30th, 2024 at 109. Every move down, 109 to 108, represents a 1% devaluation in the dollar index. So it has lost roughly 9 to 10% in value. And that 10% of loss goes directly into a 10% gain in gold. The other end of the formula, so to speak, is whether or not market participants are actively buying or selling. And what we noticed last week is even with some remarkable moves in gold, they were predominantly dollar-based, meaning it had less to do with the activity of market participants and more to do with the dollar trending lower. And if I go ahead and really blow that up, so this little red line here represents this week. And of course, we're midweek. But look at the low that the dollar hit last week. So it opens last week at 99.45, trades as low as 97.77, and is currently back up to 99.25. So even though we've seen a tremendous range, the differential last week between the open on Monday and the close on Friday was really restrictive, 99.36 to 99. So a 0.25%, very, very small move in terms of the net change. Right. And the way that that relates to gold, of course, is the series of rallies that we have seen over the last year, year and a half. This goes back to October 2023. That's where my pointer is. If my pointer's showing up on screen, the crosshairs are. But you had gold at 2,000, and it ran from 2,000 up to 2,600 in a fairly short period of time. In other words, a net gain of $554 in 134 bars. And this, of course, is a daily chart. The rally that we had in June 2024 began at 2,450, I'll round up, and concluded at 2,900. So in terms of the net result, it gained 18%, but that was $455. The first rally was $554, a 27% move, and realizes gold gets more valued, higher in price. The dollar amount might go up, but the percentages are going to get diluted. So when we look at a 33.29% gain, which is from the middle of December last year up to just recently, it's a 33% gain over 86 bars. And this is so 86 trading days, but a net gain of $878. But I draw your attention to this white box here, which gives you the angle that we're looking at. So this is a 32% angle, and I'm simply measuring the low here to the high here, a 32% angle. Here, the angle is only 19%, and here the angle is in about 26. So this rally is significant. It is more than significant in that we have seen gold gain more value in a shorter period of time relative to the other rallies that occurred as recently as middle of last year and the end of 2023 up to about April of last year.
The inverse relationship between gold prices and the US dollar remains one of the most fundamental dynamics in global markets. This relationship has been particularly evident throughout gold's rallies in recent years, including the surge observed in 2024 and into 2025. Between January and April 2025, gold prices went parabolic, rising from just under $2,600 to as high as $3,500 per ounce. This rally coincided with a persistent slide in the DXY, the US dollar index. The sell-off in the dollar stemmed from a mix of soft economic data, rising fiscal concerns in the US, and dovish Fed commentary. The lower dollar again magnified gold's appeal to international buyers and institutions seeking to diversify reserves away from dollar exposure. Historically, extended periods of dollar weakness, such as those seen during the 2008 financial crisis or the post-COVID monetary easing in 2020, have often aligned with multi-month or multi-year gold rallies. Experts like Gary Wagner believe we are again upon one of those periods, and it will be highly beneficial for gold prices.
Okay, my new base is 3,300, and
Wow.
it's based upon really the recent activity. I'm looking at the body size here and here, meaning Thursday, and these are short-term targets, by the way, and Wednesday. You've had a slow succession to lower closes, but all of them have been above 3,300. So I would expect that at the point this changes from consolidation, if we get a correction, it's one thing. We'll probably see gold trade to about 3,200. However, because of the fundamentals in play, and specifically I'm addressing the tariffs and what that's going to do to our economy. We've just had some key numbers come out this week. We still have the non-farm payrolls report, which the estimates have really dwindled. And we had GDP come out. We've got the PCE come out. So we've got important reports coming out, and they're all alluding to the same thing. And that is that what tariffs have effectively done is contracted growth and contracted the economy, the real GDP in this country. The same goes for a lot of the European nations and globally. If the end goal with tariffs was to have an economic contraction, I would say that the administration was 100% successful in that endeavor. However, I don't believe that that was the ultimate goal, but that is the outcome right now. You've got certain markets, interest rates, as well as gold, that are not acting in a traditional sense, because the anticipation with gold was that we would get some interest rate cuts this year by the Federal Reserve. Now, the Federal Reserve is still saying that their target is to cut rates by about a full percent, but we are already, into the year. We've had no rate cuts, and the anticipated first rate cut of 25 basis points is not expected until June.
Yeah.
So we really haven't seen the interest rate cuts that we had hoped for, yet we have seen gold barrel to these incredible all-time record highs, specifically above 3,400 here with this tail, meaning that gold last week opened at 34.34. It closed at 33.90. However, it traded to an intraday high above 3,500. That's why you've got the wick, but no real body in this area. So you've got the first level of real resistance at 34.34. You've got absolute resistance just above 3,500. And my target, once we move back into a dominant period in which we see gold prices begin to accelerate, return to rally mode, I will expect it to take out the new brass ring, so to speak, which is just above 3,500. And so 3,600 is definitely achievable. We've had calls by certain banks for 4,000. I could see that maybe next year, but realize I am exceedingly conservative with my numbers. So if we hit 3,800, I would be happy with it. It would come in much above my estimates, but it wouldn't be out of the blue. In other words, it would be an understandable move based upon the high level of uncertainty in terms of how the tariffs will reflect in higher prices or inflation further on down the road. And that's key with tariffs. There's a huge lag there between when they're imposed and when the consumer sees it buying their goods. I think that the range and the levels that gold will achieve are going to be highly tied to the fundamental events at play. In other words, as long as tariffs are continuing to be imposed and there's no resolution between the trade conflict between the largest economy in the world, the United States, and I believe the largest exporter in the world, China. When you've got 145% tacked onto the cost of goods that are exported from China, imported into the US, it dramatically changes the amount of that goods that will be sold, because that's a more than significant increase. That's over a one and a half, a doubling plus in terms of price based upon the tariffs. So until the tariffs are either done away with or mitigated to a smaller percentage, in other words, we are not the only ones that use tariffs to control trade balances with other countries. All countries, to some degree, or most countries, to some degree, use tariffs as an effective means to export more than they import. That's the whole idea behind that. And so as long as tariffs are fully levied on these countries, and specifically, there's no resolution between trade talks, which are non-existent from what I understand, what I've read, between China and the United States, we can expect the uncertainty meter to continue to move higher, and more uncertainty genuinely moves gold to higher ground.
China has confirmed that it is reviewing proposals from the United States to initiate negotiations regarding President Donald Trump's extensive tariff measures. In a statement released Friday, the Chinese Ministry of Commerce said the U.S. had, recently, through relevant channels, actively conveyed messages to China. The ministry added, China is currently evaluating this. The remarks follow reports earlier in the week from Chinese state media, indicating that the Trump administration had proactively reached out to Beijing through multiple avenues. These developments mark a potential turning point in the ongoing trade dispute, which has effectively resulted in a mutual embargo between the world's two largest economies. Global markets and business leaders have been watching closely for any sign of progress amid growing concerns that a prolonged standoff could seriously undermine global economic growth. Last month, the International Monetary Fund revised its global growth forecast for 2025 downward to 2.8%. Meanwhile, J.P. Morgan Chase has estimated a 60% chance of a U.S. recession within the year. President Trump, speaking Wednesday, said there was a very good chance of reaching a trade agreement with China, provided the deal was fair. China's Commerce Ministry reiterated its long-standing position on the dispute, stating, "If there is a fight, we will fight to the end. If there are talks, the door is open." The ministry emphasized that the tariff and trade conflict had been unilaterally initiated by the U.S., and that any meaningful negotiations would require the U.S. to demonstrate sincerity by reversing its unilateral tariff measures. It added that attempting to use talks as a pretext for coercion and blackmail will not succeed with China. Do you think there's any chance of both parties reaching a suitable agreement anytime soon? What will such agreements mean for gold and silver prices? Let us know your thoughts in the comments section below. If you enjoyed this video and want more like this, don't forget to smash the like button, subscribe to the channel, and turn on the notifications bell for more videos. Thanks for watching, and see you in the next one.